Money market options are very good options for people who are looking for low-risk ventures, options that can assure the safety to a good extent of your capital. They are very good holding grounds of money because an advantage of them is that you are free to be adding money anytime, and very many of them will accept as low as 1,000 shillings here in Kenya. So you can be investing your money there periodically. Interest accrues daily and then it's applied monthly. So you can be able to also check out your money at any point, many times without losing on the interest that you have earned for the days that the money has been with them. There are very many providers, but if, for example, you are coming from Kenya, you just go to the Capital Markets Authority and check. There is a long list of the service providers. You are checking because you want to put your money with people who are regulated. There are other factors you need to consider as you choose. The strength of the company that you want to invest with. Okay? So how are their financials? You want your money to be with a strong company. Unfortunately, many people rush to look at the expected returns before they look at these other things that I'm mentioning. Also look at what is called funds under management, FUM. So periodically there will be reports. You can Google such reports, funds under management. So you also want to see how many people have trusted this company. And the money market space is also picking pace very fast. There has been a lot of talk about it, and people are beginning to embrace it as a very good avenue of holding money that probably you will be needing in a short while. But even if you will not be needing in a short while, you can allow it to be compounding. So you just let it be, let it earn and let it keep compounding. It will give you slightly better returns than if your money was to sit in the bank. There are a few banks that have specific savings accounts that may try to compete with the money market option, but most of those will be where you place the money and wait. But the money market option is open. You can be placing the money every other day, and then should need arise, you can be able to take your money. So if you have some money that you will need at the end of the year, instead of sitting with the money at home or in a normal bank account, then the money market space can be useful for you. You can also look at now the rate of return. What is their average rate that they are promising? Rates keep fluctuating. Over time, they've been able to work out and say, if you invest with us, we can be able to give returns that will play around this particular average. So you realize I'm placing return after those other things, because those that rush to look for returns, you might land in the hands of firms that probably are struggling with liquidity. And the day you want your money out, maybe they are facing struggles, and maybe that might delay you. Yet it was money that needed to be you needed to use at a particular time. Some people also look at the customer service. This information is usually readily available. They keep ranking them in terms of customer service. So if you are this kind of person who also values customer service, you may use it as a basis of your decision. You also can consider the commission charged, because how money market funds work is that resources are pulled from like-minded people like you, and then they are invested by these firms that are investment experts, and then they bring you returns and then deduct a commission. So when you are opening a money market fund account, begin to ask them what they deduct as their commission. So you can also use that as a basis of choosing who will host your money. Of course, you want to look for a firm that is deducting a favorable commission, because another firm might be giving huge returns, but they are also diluted by the commission that they are charging when they do the business on your behalf. Because what they are doing is collecting money for you, then they invest for you, bring returns, and deduct something. That's how basically the unit trust space operates. So you will find them coming in different names. The money market fund basically will pick your money and invest in near cash options, very liquid options, overnight lending, and things like those. And then you will also find an option called the bond fund. So the bond fund is for people who would want to invest in the bond space, the government bonds, corporate bonds. But so you would want the experts to do that for you, but you are specific. You want your money to play in the bond space. You will also meet the equity fund for those that want their money to be invested in the stock space. You might also find a product called the balanced fund. So let those ones not really, the mode of operation is the same. Whether it's a money market fund, it's a bond fund, an equity fund, or a balanced fund, the mode of operation is the same. You are giving them your money, they are doing things with your money, then they bring you returns and deduct a commission. In a nutshell, that is how the unit trust space, the money market space operate.